Hello and welcome, as today is Saturday. It is the third day of March 2018. My name is Derek, and like always, everything within your own risk and your own reward. I have some Fibonacci levels that I placed in a few days ago. And what I'm seeing within Ethereum, as it found support at a key level on the 20th of February after a decent decline from a key resistance level in this case. It rallied up to the 18 average declining band for the first time since the fall, and it is now falling. It is breaking below this 18 average of lows as well. So I wouldn't be surprised if this thing ends up in the next few days as a test to the lower level. And it's a decent decline in at the 526-ish area down to 520. On the 400-minute time frame, we can see it a little clearly how it just had great support there. Had the little lift off, and even with this 18 average, we see it resisting this level and not really much support at all in here. Just dangled around this for about 3 periods or such. So yeah, it came down on the first day, 2 days ago at 7 p.m. And then it left it yesterday at 1 p.m. and it's been in a decline ever since. As far as Dash is concerned against Bitcoin, it had this level of support that it has broken down below, and even a bit below. Well, it's obviously a bit below this level here as well. So then what I like to do is see, okay, what I see a clear range bound market over a very, very long-term time frame. So I'm going to calculate the low Fibonacci and the high. So what I'll do is I'll just highlight it to this level. I can see 3405 on the top of the screen. That's the low. We'll locate what the amount of the high happened to be, and to make it easy, I just do it this way so it's easy to find. The price is 125. We will use the 3-day time frame and insert the significant key Fibonacci points in. And it crosses up right in this little area, so I'll shrink up and just see what's going on in here. Support found last, successfully at least, on January the 31st. Rallying close to the upper band and to the 18 average of highs, falls through the 18 lows on the period closing the 18th, and it is now breaking below barely. So definitely cautionary signs, and you can look at 23% correction in here. You can look at the previous low levels as it's 38 to the 35 handle. As far as last key areas for which it came from, you also got a much larger Fibonacci. First off, let's analyze this move in here, as maybe we can find something. The Fibonacci upside most likely was just a hit in the ballpark if I take a look at this. When you're looking to get key high, when you see a situation like this one, which is around the double or single 0275 handle, it was hit on 3 different occasions, so I am going to use this number in my analysis continuing forward, 2750. And this low in at about, we'll do 0051. And that gave me an upside target near the 52.33 handle, which meant that was an area where it got its second level up there. So it didn't find resistance at the 52.33. Rather, it, well, I guess it did on this period. What was the high in here? 497 appears below. But it bursted through it. And when you don't find resistance where you're supposed to, well, that explains why this thing goes and has an additional plus 100% gain on top of it. it has been magnificent support along the way. Now, for now, I think if it does end up breaking through within these levels, there definitely is decent gap fill here. I'd be, again, first looking for a move in here, and I'll calculate the Fibonacci from, again, I'm trying to decide, do I go with this low here? Do I go with this breakout low in here? See, I kind of want to go in here because of this correction being a successful one. So let's do that. It broke out from the low of 55. And then we will see it at, again, this was 150, 125. So we'll look at the calculations within the retracement on this series. And its next key level below was 59.81. So it really coincides with all of these other 52 numbers that I've been talking about, a big level that we're at. And given 52 is a big handle, that still has, that really is the next support mark, is closer to the 50. So it hasn't even broken any of those supports. But if this rectangular range that has been in place for really over a year now gives in, the next down target I have calculated in at, it's 37.91, which is really a match of this low in here. It would be a retest of it. It would be the third time it would do it. And even though the more likely an area is tested, the more likely it is it's taken out, when it comes from a very good gain and it has to fall hard to get there, then I'm going to at least like the objectives that I can find support and at least have a decent rally compared to the last one, meaning if it were to have a fast move down to, say, this 38 handle, having a rally up to this line at 55 would still be okay, and it would be definitely something you could see in a bearish situation, which is why I note when something is both bullish and bearish to occur, that is one of the situations where it makes sense for such. And moving on to Ripple, which is relatively simple, 101 Fibonacci analysis, at least for me, 101, as there's been major support at this level. And we're taking a look at some of the 3-day. Let's move it to the daily. So it did so on January the 16th, and it had the lower high rally meeting up with the newly declining 18 average, grinding its way back down to this band, originally getting it there on the 2nd of February and grinding all the way down to the 8th. So for that week, it just stayed hugging the 18 average of lows below such. 2 days above it on the 9th and the 10th, as the gain was from the under 10,000 handle up to under 14,000. So that was a gain of about 40%. But then it has grinded its way back, and then for a few days just resisting this 18 average, or not 18 average, rather resisting the Fibonacci mark. And now it has had steady down day, down day, down day, slowly but surely every single day, grinding its way lower continuously. I would still be looking for resistance now at this 93.38 level, but 5,000 is where I'll be looking to accumulate. When I'm showing these charts, this is crossed against Bitcoin. So I had somebody talk a bit before about this. Oh, well, what's the price in US dollars? Calculate that yourself, because that really is what this is all about, is trying to help you determine different things like technical analysis in whichever forms it may help. But it's always going to come down to you to decide how the information works within you and how you can work it within what you're doing. Because you could be trading Bitcoin hardly at all and just be trading Ethereum against everything, and then using this information to help you gain an edge trading your Ether crosses. And by all means, that is magnificent if stuff like that is the case. Now that I think about it, let's show the Doggy or Doji coin, as this one has a very interesting situation because it came down to this low in the early parts of February, had this lower high rally getting above the 18, rallying to 80 after being down as low as 41, or about a 100% doubling move. But where it needed to correct within this 18 average, we can see that it fell below this 18 average a few days ago and is continuing its decline, now down to this previous area. Support would fill, of course, down to the 40, and you'd be looking at this area, which is now with a declining 18 average band, will be falling towards at around the 58, upwards to 60, but between 55 and 60 to be a level of resistance. Let's take a look at some Fibonacci in here. See if it makes sense within this market. We got a high at 113, and the breakout lows were in at 15. So 15 and 113. And the key numbers are 52 and 32. So it really does look like they're playing well. Let's put in 52. Well, they're close enough. And then 32. So therefore, if the market happens to break down from here, don't be surprised if it pierces below, maybe down towards this level of resistance at around the 28 handle level as a down target for this particular coin, Doggy. Now Monero, on the other hand, is showing a very different picture, as it's been in a uptrend, as we can see in here. It had a little bit of a sideways movement towards the trend, but we can see that it is now breaking out above it. That happened in yesterday's session, and today so far holding in the upper area, which is definitely a positive consolidation mark. And if we look at Monero through as much history as we can, it's pretty much at the all-time highs crossed against Bitcoin, and it too has been following a uptrend along the way. So you can always make a case that this is an ascending triangle, which it pretty much is, and resistance is practically in here, which means this entire run of movement that has been going on since around Christmas has been supporting a significant area of resistance in here. So very, very productive look, to say the least, that if this thing ends up breaking this level of resistance, then who knows, this thing could have some substantial gains moving forward. When we switch it over to Litecoin, I talk a lot about this individually, so I'm going to talk about this quick. It's not in the most bullish of situations on the daily time frame. In fact, one might say it's ready for a move down to the 167 handle. But like Monero, it's got the same situation where it's really holding and staying above this key area. And really, this 160 number, I mean, big deal. It's still resistance along here. That is about the area I want to see it hold and stay above, but it is a key significant Fibonacci point, and an area where I do obviously have buy orders in, ready to go if the price action happens to reach down towards that point. When we look at this on a shorter term time frame, I was talking about yesterday how the move was either going to create a good possible reversal, come up to this level, and then start to make a pattern of higher highs and higher lows after this waterfall type of decline, I guess water slide. You'd see like in an amusement park kind of deal. But question is the water slide over, or is it ready for another burst lower? Because this does look in here like that possible failed breakout. And oftentimes from a failed move in one direction, you can get a fast move in the opposite, and the opposite of higher is lower. So the price action over the last couple of hours showing a little bit of weakness, and breaking down below that 160 number would most certainly be an area I'd be looking for it to go. But to me, these are all short-term fabrications in this long-term market, which is, again, like I state, as long as it can stay and hold, and I can fix that by going like this to make it a longer line. So that, yeah, this area here of Fibonacci support, I mean, it's the area of, I've said that word area too much, but it's the place in which this is where resistance was on all of these occasions. It doesn't have to be the highest level. That's a key point as well. But when you look for the range of where it was, well, the range was between this high and at about 220 and the 160. So that's how I'm looking at the markets. Like always, everything is within your own risk and own reward. And thank you for tuning in and have yourself a great day. Bye-bye.